Hello, everybody, and thank you for tuning in to the Ron Paul Liberty Report. Today, Daniel McAdams, who's with me just about every day, is still with me today, but he's with us from Virginia by Skype. But Daniel, good to see you on the screen right now.
Thank you, sir. It's good to be back with you.
Okay, good. I wanted to talk about economic policy today. We spend a lot of time on civil liberties, which is crucial. Matter of fact, if you deal with civil liberties, you can deal with the rest of the problem, and also foreign policy. And I want to talk about economic policy. Also, a significant economic report that came out today. And the report came out about the retail sales being a surprise down. Actually, it didn't grow, but they were expecting some growth. But the fact that they were totally stagnant was a strong negative for the market. And one headline said that gold responded significantly and jumped over $1,200 because of these weak retail sales. And I found that, rather interesting because sometimes headlines don't tell the whole story. Because in many ways, if the retail sales had jumped a whole lot, that would be justification for gold to go up, because then we would be back into price inflation going on. But right now, we're in a mode where the markets anticipate what the Fed will do. So bad news is good news for the markets in some ways. The bad news is that the economy is very weak, and therefore the Fed will keep printing money, and that'll be good for gold. So, and that is true. If you keep printing money, it's good for gold. But if you had all that money circulating and boosting prices in the economy, that would, of course, would be good for gold too. But there's such a contradiction going on because we have so many government reports and people anticipating, and the stock markets are high and the bond market's high, and a lot of malinvestment out there. But right now, there's essentially two economies: the economy for the rich and the economy for the poor. But there's a record number of people out of the workforce now, over 93 million people. And you say, well, yeah, but the unemployment rate is low. Well, if you don't count people, the unemployment rate is going to be low. So I imagine that you've paid some attention to this and what's going on in the economy.
Yeah, it's interesting you talk about the super rich, and one thing that's been in the news this past week is a Picasso painting that went for a record amount, I think $180 million. The painting went for, and they say that there is a good deal of art that's going to be going on the market in the next couple of weeks, somewhere in the neighborhood of $2 billion. So is everyone just getting interested in art, or what's happening with these huge prices for these things?
No, the people who are making money can thank the Fed. The people who lose their jobs, they have to blame the Fed. But this is not unusual when money is being destroyed and there's loss of confidence in the currency and not many other places to go. I mean, how many more bonds do they want to buy? Matter of fact, just the last couple of weeks, there was a significant drop in sovereign bond values. So people don't want to keep buying bonds, and stocks are very shaky at this high level. So people look for hard assets. And one of the hard assets, especially for the rich, and they're the ones who have all the money, and they're getting out. So I think it's a sign that you're going to see significant depreciation of the dollar and the inflation rate rising, even according to government statistics. The other thing that goes up under these conditions before everybody's rushing to buying gold, and gold going to $2,000 and $3,000, will be numismatic coins. Numismatic coins go up quicker than the bullion coins because the wealthy will want to buy these as well. But no, I think this is another bad sign of the economy and how weak it is. And the other thing that I watch carefully is, the value of the dollar. Well, first, I look at the gold prices. That tells you long-term the real value of the dollar. So when I started looking at the dollar-gold ratio, it was $35 an ounce. So it was a very correct assumption that they were going to print a lot of money when they got off the gold standard. And sure enough, gold went from 35 up to 1,800, now down to 1,200. So long-term, that is a very accurate measurement. On the shorter term, There's a lot of trading going on, minute to minute, hour to hour, day to day. And those with a lot of money, instead of buying paintings, they can't all buy paintings and coins. What they do is they trade currencies, and there are currency wars going on. And the dollar in the last year or so has benefited tremendously. The index went from 80 up to 100, and now, though, it's backed off about 5. Under this news today that we had about retail sales, the dollar actually backed off like 1%, which is significant. And it looks like that. Well, it looks like that was reflected in the gold price, but it also was a reflection that people were thinking, oh, maybe for now we can trade and buy euros for a short time. But I'm convinced, that long term, all the paper currencies will be devalued. They'll be devalued constantly. But on the short run, there's a lot of trading going on. There's fundamentals, but there's technical factors. There are emotional and subjective factors that go on. So there are a lot of factors that determine day-to-day prices.
One thing I noticed on Zero Hedge recently was an interesting article. The headline tells the whole story. Almost half of U.S. states are officially broke. And it starts out talking about Louisiana, which was fairly reliant on oil prices. And the oil prices, of course, have gone down over the past few months. And they're in pretty dire straits. Where does the state bankruptcy and oil prices, where does that fit into this?
Well, I think that is significant, and that's a factor that has occurred. Prices went down, and even Texas has had some setbacks because the price of oil is down, and also drilling for oil is way down. But there's also these statements, too, that, and that might be the reason some of these states have had less revenues and they're getting into bigger debt. But there was one piece of news that I saw today and said, oil is not coming back. And I would say first, how do these people get so smart all of a sudden? But there are too many factors involved. But most people think about, say, the price of oil or the price of a farm crop, supply and demand. Of course, we all know supply and demand is key for setting prices. And when you don't have that, you don't have an economy, you have socialism, and the markets break down. But what they fail to look at is the value of the currency, the supply and demand of the currency. So even if you had relatively stable supply and demand of a product, if all of a sudden you have way too much supply of currency, the currency is devalued, so that has an effect as well. But this is what they can't measure. They ignore the value of the currency, so all kinds of things will affect that. Right now, I think we're in the early stages of the dollar being rejected as a reserve currency, and that's going to help push oil prices up. Oil went down under $50 a barrel. Now it's over 60, so there's a significant recovery. But I think oil is capable of not only reaching 100, but when times get rough, which they're going to, oil will be a lot more because the dollar will become so weak. But there's other thing. You and I have talked a whole lot about the military operations going on in the Middle East. Saudi Arabia, I can't remember when the Saudi troops were so involved, and they're involved in this civil war, invading another country, and we're their partners. I mean, who knows? And the Iranians aren't going to sit idly by. If they're not even allowed to go take their ships in there, they might resent this. So a major war could break out, and that would be another factor. So this whole idea that oil is not coming back, they mean oil is not coming back in terms of dollars. I don't believe that. It will come back. But what do you think about this, the military expenditures right now? Because that has an effect on our budget.
Yeah, it's funny, a lot of the hawks in the House and even among the potential presidential candidates in both parties claim that Obama has gutted the military. And I was looking over some numbers, and George Bush's defense budgets averaged about $600 billion while he was in office. Obama's thus far have averaged almost $700 billion. That's a huge increase in defense budgets. And despite all the talk about the sequester, so there's clearly a ton of money being spent there. Weapon systems are becoming much more expensive, much more technical, and you just see this massive increase in that sector as well.
You know, Daniel, they always have that saying, just follow the money. I'd sort of like to follow the money that we take from our taxpayers who are having a difficult time making a living, pumping it into the military-industrial complex. Their prices go up. They make a lot of money. I wonder if they're buying valuable paintings these days, you know, to escape the harshness of inflation. So that may be the case. Now, a minute or so ago, you mentioned about the 22 states are in deep debt. And I think this is something that is very important, because debt is one of the things that is characteristic of easy money and credit, because people go into too much debt. That was there was a limit on the debt that Detroit could assume. There's a limit that Chicago is assuming. There will be a limit on what our country can assume. The housing market, there was a limit. So debt is excessive debt is a consequence of an easy money policy. And of course, Keynesians, the Paul Krugmans of the world, say that people like me, we just worry too much about debt. What we need is more debt, and we need more spending. So I think that is a significant number, those 22 states that are having trouble. And of course, it's going to contribute to chaos in the streets too, because they can't tax to raise this money, and the states are generally obligated to balance their budget. So what are they going to do? Cut some of the social services? That's when I fear a lot of danger.
Yeah, absolutely.
That's for sure. You know, the import prices as well have gone down dramatically. And some people may use that as an argument. Well, Ron, you worry too much. That's deflationary. Oil prices are down, and these prices are down. But that is not deflation. Deflation only occurs when the money supply shrinks and the value of the purchasing power of the dollar or the currency actually goes up. And that is not occurring. We are just accumulating more and more debt, and there is going to be an end to it. And I think some of the things that we've already mentioned is an indication that we're getting closer and closer to that time when you know, push comes to shove. And even today, with that reaction to that downturn, you know, the stocks went up initially, but that doesn't mean at the end of today the stocks are going to be high. It also means that there will be people watching very closely, you know, the gold market too, because the gold has been floating around 1,200. It goes down, up, down, up. But if it really breaks out at 1,200, the traders, the technicians are going to join the fundamentalists, because as a fundamentalist, that's inevitably going to go up. So when the technicians join in, then you're going to see some rapid rising of these of the precious metals, as well as all other commodities. But if we're looking for a scapegoat, if we look to find to blame somebody, guess who I would blame number one? That, of course, is the three-letter word. That is the Fed. But the Fed is a consequence of an overall policy of people wanting something for nothing and us fighting wars that are useless. And some people still believe that war is good for the economy. It's a system of values. It's an economic philosophy, and that is what's driven us. But if you didn't have a Fed to feed the money in and monetize this debt and produce all the debt and the malinvestment, believe me, we wouldn't be in this mess. And those who think that the correction occurred in 2008 and 2009, that is a dream. All we did was shift the pain and the burden away from the wealthy, give them a break, allow them to go back at it again, and dump all these problems on the poor. And that's why we have 93 million Americans now that are underemployed, unemployed. And I think that time is running short. Hopefully our side can wake up more people and have a greater conviction in the ideas and the principles of liberty and peace, because with that understanding, believe me, we could solve most of our problems. I do want to thank everybody for tuning in today to the Liberty Report, and come back and visit us soon.